Everyone is so downbeat after that forecast. Tough talk on the macro economy, slowdown in cloud growth. Why do you say buy?
Yeah. Thanks, Sarah. Yeah, I think the narrative is starting to change. You know, we knew the top line growth was slowing. We saw that happen this quarter in the e-commerce side. I think what was a kind of a surprise this quarter was that AWS was slowing. But now that's kind of a burden that's now off of Amazon's shoulder. It was bound to happen eventually. We saw it happen this quarter. So now going forward, you know, I think it's going to be less focus on the top line because we know revenue growth is going to slow, and there'll be more focus on the bottom line and operating profits. And I think there's a lot of things to be excited about on the bottom line. You know, really the e-commerce side hasn't posted a profit in several quarters now, but you know, we think that is set to change in 2023 and 2024. You know, we expect Amazon's services side of the business, things like AWS, advertising, third-party fulfillment services, those revenue streams to really grow next year, and that should also help margins. You know, Amazon's also cutting back on their capital investments. They're pausing hiring in certain parts of their business. So these are all things that, you know, investors want to see right now. Investors want to see companies tighten their belt and manage costs in this environment. And that's exactly what Amazon's doing. Amazon's focusing on what they can control, and I think that's a positive and a catalyst for the stock.
No, I think Jim Cramer also is sticking with it and likes the story for that earlier in his morning meeting, saying the expense management is really the key here. So why hasn't it yielded more results? Laura Martin of Needham on Tech Check said we're not running a not-for-profit here. The scale is not resulting in profitability.
Yeah, I mean, I think it's taking time. You know, if you look at how much they've invested over the past 2 years, it's an incredible amount of money they put into their fulfillment network, their transportation network, and AWS. And now we're finally starting to see some of those capital investments pull back. You know, this year, Amazon's expected to decrease fulfillment and transportation CapEx by $10 billion. And so now it's really allowing itself to grow into this supply chain network that it obviously overbuilt the supply chain network over the past 2 years, but now it's starting to finally allow itself to grow into this network. And I think that's going to bode well for margins. It's not going to happen overnight. It probably won't happen in a quarter. But, you know, I think we'll start to see pretty significant margin improvement in 2023 and even in 2024. You know, we're actually expecting operating margins to nearly double in 2023 compared to 2022. So again, the story I think is going to be the narrative is shifting from the top line to the bottom line. I think that's a big catalyst for the stock next year.
Well, what about the top line now? Now, do we have to be worried about that too? Just a quote from the conference call from the CFO. This is uncharted waters for a lot of consumers' budgets. And Amazon increasingly has looked more like a spending picture of Americans.
Yeah, I think we all knew that e-commerce demand is slowing. Again, we saw that happen this quarter. You know, for Amazon, it's experiencing even slower growth in Europe. You know, in Amazon's perspective, Europe is already in a recession, and that's where a lot of their weakness in e-commerce lied. And in their AWS side, the slowdown in revenue growth, it was not necessarily that Amazon lost customers in the AWS business. It's more that its existing customers are looking to manage their costs, so they're coming to Amazon and being like, "Hey, we need lower price, more value options. Can you work with us?" And Amazon is doing that. So it's not necessarily that they're losing
that's what they said.
Customers. They're not losing customers to, say, Microsoft or Google. They're actually still gaining customers. They said yesterday that their new customer pipeline is actually pretty strong. So, again, it's all these macro factors that are really driving the weaker outlook right now. It's not so much idiosyncratic risks. And I think that's why, the shares don't deserve to be, down as much as it is today.
Right. You lowered your target from 170, but 152, which would still be a big buy from here. Arun, thank you for joining me on the call.
Thanks, Sarah.